Happy, healthy lives for you and your family. There's nothing that matters more. Blue Cross and Blue Shield of Alabama provides employers, families, and individuals access to a variety of health plan options, so it's easy to find a plan that will fit your needs. Let's take a look at your health plan options for the upcoming year. Birmingham Southern is providing 3 health plans for you to choose from for the upcoming year. We know at first glance it can be difficult to understand the differences between the plans and what they will mean for you and your family. We're going to walk you through some key terms and explain the differences to you to hopefully make your decision a little easier. Let's get started. First, let's go over some common insurance terms. A copay is a fixed amount, for example, $25. You pay for a covered healthcare service, usually when you receive the service. The amount can vary by the type of covered healthcare service. For services that have a copay, you are only responsible for the copay amount. There will be nothing additional charged to you for covered services received from in-network providers. Deductible is an amount you owe during a coverage period, usually 1 year, for covered healthcare services before your plan begins to pay. Coinsurance is a type of coverage where you and the plan split the amount paid for a covered service after you have paid a set deductible. For example, under your health plan offerings, for many covered services you pay 20% and Blue Cross pays 80%. We will walk through an example in a moment to illustrate how deductible and coinsurance are related. The most you could pay during a coverage period, usually 1 year, for your share of the costs of covered services is called the out-of-pocket maximum. After you meet this limit, the plan will pay 100% of the allowed amount. This limit helps you plan for healthcare costs. This limit never includes your premium, balance bill charges, or health care your plan doesn't cover. This is a safeguard in place for all health plans in the event that you have great health care needs to limit the amount you owe during a plan year. Now that we've gone through some of the common insurance terms you need to know, let's take another look at your health plan options. As you can see, Option 1 has a higher monthly premium with lower deductible and out-of-pocket maximum. We move all the way over to Option 3, we see it has the lowest monthly premiums, but with a higher deductible and out-of-pocket maximum. Option 2 falls in between. Option 3 has an option for a health savings account, or HSA, to offset the higher deductible and out-of-pocket maximum. For many covered services such as inpatient hospital care, maternity, and diagnostic lab, all 3 of your health plan options cover at the same amount. For these type of services, you will be responsible for 100% of these costs until you reach your calendar year deductible. After that, you will be responsible for 20% of the cost and Blue Cross will pay 80%. It can be hard to understand what these terms mean until you see how they work together. For this example, we'll illustrate how deductible, coinsurance, and out-of-pocket maximum affect your healthcare costs. It's simplest to think of them in this order: deductible, then coinsurance, then out-of-pocket maximum. Let's look at an example for a lab test that costs $200. Before you reach your calendar year deductible, you're responsible for 100% of your healthcare costs. If a lab test costs $200 and you haven't met your deductible, you owe the full amount of $200. After you reach your deductible, you and your plan will split the healthcare costs. As we covered before, for many covered services, your coinsurance is 20%. So that same lab test would only cost you $40 rather than the full cost of $200. Once you reach your out-of-pocket maximum, you pay nothing out of pocket for the remainder of the plan year. Therefore, you will owe nothing for the $200 lab test. However, you will still continue to contribute toward your monthly premiums. Coverage is handled differently among the 3 plan options for other services. Option 1 and Option 2 plans have copays for physician visits and trips to the emergency room. With the HSA plan, Blue Cross will cover 80% of the cost once you've met your calendar year deductible. For all plans, you will not have to pay out of pocket for preventive services. We encourage you to visit our website to view a list of these preventive services, such as a yearly office visit, routine immunizations, and screenings. For all 3 plan options, the copays are the same for prescription drugs. Keep in mind, options 1 and 2 are not subject to the calendar year deductible. You will always pay the copay amount. With the HSA plan, your deductible applies to prescription drugs. So, until you reach your calendar year deductible, you will pay 100% of the cost of your prescription drugs. Once your deductible is met, you will only pay the copay when you go to the pharmacy. Now that we've discussed the differences across the 3 plan options, monthly premium amount, deductible, and out-of-pocket, there's another factor to keep in mind when considering option 3, which is an HSA. A health savings account, or HSA, is an account you can put money into to save for future medical expenses. HSAs must be coupled with a high-deductible health plan, which for Birmingham Southern employees is option 3. The HSA helps to offset the higher deductible and out-of-pocket maximum. You can use the money in your account to pay for qualified medical expenses for you, your spouse, or your dependent children. This includes most medical, dental, and vision care. An HSA offers you the ability to make contributions directly from your paycheck. The amount contributed is not considered part of your income for most payroll taxes during that pay period. You then may use HSA funds to pay for qualified medical expenses. Unused funds remain in your account and can be used for future medical expenses, even into retirement. There is no limit to the amount you can have in your HSA. However, the IRS limits the amount you can contribute each year. The amounts for 2017 are $3,400 for an individual and $6,750 for a family. You may still be wondering how an HSA can benefit you. Let's take a look. You can lower your health insurance premiums by switching to health insurance coverage with a higher deductible. Your HSA protects you against high or unexpected medical bills. You can use the funds in your account to pay for current medical expenses, including expenses that your insurance may not cover, or save the money in your account for future needs, such as health insurance or medical expenses if unemployed, or medical expenses after retirement, before Medicare. You can save the money in your account for future medical expenses and grow your account through investment earnings. When your balance reaches a certain amount, you can grow your account through investment earnings, like a 401k for your health. Accounts are completely portable, meaning you can keep your HSA even if you change jobs, change your medical coverage, become unemployed, move to another state, or change your marital status. Funds remain in the account from year to year, just like an IRA. There are no use it or lose it rules for HSAs. An HSA provides you triple tax savings: tax deductions when you contribute to your account, tax-free earnings through investment, and tax-free withdrawals for qualified medical expenses. As you can see, there are many things to consider when choosing your health plan, not just the deductibles and out-of-pocket maximums. An HSA plan has many advantages that may make it a sensible choice for you. For more information about health savings accounts, please watch the video from our partner, Health Equity. We hope you find this information helpful as you choose a health plan that best fits you and your family's needs. And thank you for carrying the Blue Cross and Blue Shield of Alabama card.